countries where we operate. We are the number one company when it comes to mobility that is currently still very much based on fuel, but we will be the number one company also when it comes to EV charging.
Yeah, really interesting to think about the logistics of how that all gets rolled out, Ben. Thinking back to the oil price and the impact that that is having on your business or where it goes to from here, capital expenditure by oil companies, by oil and gas companies, is at historically low levels. Do you think the sector is investing just enough to avoid a supply crunch? Could we see a spike in prices as a result of this phenomenon over the near term?
I think it's a very good question, Anna, and I think it depends a little bit on the time frame at which you look. At the moment, of course, we see pretty good oil prices. I think it's approaching $59 today, Brent. But I think that is probably much more driven by short-term factors. Demand is not back where it was a year ago, but then again, we see a lot of discipline also from OPEC Plus, and therefore the market is being held in balance quite well. If you look at the slightly longer term, yes, we're not the only ones, of course, who has cut back on our capital spending. We went from a plan of $25 billion to spend in our entire business, but not just in oil production, to $18 billion. So that's a $7 billion drop. And as I said, we're not the only ones. So fast forward a little bit, and yes, indeed, I would imagine in the second half of this year, we're beginning to see not only recovery, but we're beginning to see a little bit of tightness in the market appearing. And I believe indeed that next year, when the recovery is probably complete, and in the years thereafter, it could well be that we see a tightness in the market that will provide for more upside pressure on the oil price.
It's interesting, you know, I was thinking about oil use when I was reading more stories again today about chip shortages. I guess the chip industry didn't expect the car demand to bounce back like it did, and as car demand bounces back, of course, we're going to need to, especially the kind of cars I buy, fill them up with more gas. Downstream has been very weak, and I wonder if you see that picking up at the same pace. I mean, is the refining recovery also in the second half of this year, Ben?
Matt, we don't have a very optimistic outlook on refining, to be perfectly honest. We see weakness in refining persist, and that is basically because there is a continuous addition to refining capacity while demand is still languishing, and as a matter of fact, not recovering as fast as it could or should in order to catch up with that overcapacity. That's also why we've said we're going to reduce our refining footprint further, and we are looking at a refining footprint of 6 super sites, which are not just refining, they are actually integrated energy and chemical parks. And that comes from 64 refineries, say 15 years ago. So we have significantly reduced our footprint simply because we do not have an optimistic outlook for refining per se. But if you look at the rest of our downstream business, which is not so much refining, it's really marketing, retail, lubricants, products like biofuels and bitumen, etc. That actually is going very, very well. 2020 has been one of the strongest years of the marketing business in history. Q3 last year was the strongest quarter that we've had. And we have outperformed the market in marketing our products quite handsomely last year as well, despite the difficulties that we have seen in demand. So we have actually quite an optimistic view for our downstream business, but not the refining part in it.
That's interesting. In terms of the global demand picture, Ben, we've seen a bit of uncertainty around the Chinese data picture just of late. How confident are you that that Chinese growth engine is going to continue to lead the global economy out of the pandemic, or do you see some stumbles there?
Well, it's let me not talk about the general Chinese economy, but if I look at our segment in it, so retail sales, lubricant sales, but also natural gas sales, they're all up. So even if you look at December last year, that was up on December the year before. January is significantly up on the January the year before. So I think not only did China have a V-shaped recovery, they're actually back into significant growth mode. And of course, a lot of the activity that we see, think of it, so fuel for mobility, lubricants for industrial use, natural gas for industrial use, are quite often, of course, quite closely correlated with how the economy as a whole is doing. So yes, we are quite optimistic about what it is that we are seeing in China, not just for our own business, but basically also how the Chinese economy can be an engine going forward.
Ben, excellent to get your insight and your perspective. Thanks so much for spending some time with us this morning. Ben Van Beurden is the CEO of Shell. Now, European markets are opening up as we speak, or they did just over the last 5 minutes. Let's go ahead and take a look at where they're trading. Here you can see on the global macro movers screen, the left-hand column is the equity index. Even Switzerland is open. That's how late we are. It's down 0.2%. The FTSE is gaining, as well as the DAX and the IBEX. All gains of about 0.25% there. Coming up, we'll talk about Italy. Is Mario Draghi going to be able to work his magic on his home country as the new prime minister? We'll talk about Super Mario, former ECB chief, now the head of Italy. That's next. This is Bloomberg.
Yeah, no, we're still stuck at home, not going anywhere.
Oh. Imagine how exciting normal will be. Just imagine.
I can't. I just can't.
They've forgotten. Welcome back to the European Market Open. Just coming up to 10 minutes into our trading session. We're fairly flat across European equity markets, but certainly some of the major markets moving slightly to the upside, up around 0.2%. US futures look fairly mixed. A three-day rally then in global stocks has faded just a little as earnings roll in thick and fast, but European stocks have opened to the upside. Joining us now is Maria Weitmaner, at State Street Global Markets Senior Multi-Asset Strategist. Maria, very good to speak to you. Let's start with the earnings season and the messages you're taking away from it. I was looking at a graphic that one of my colleagues prepared that showed that just beating the backward-looking estimates on sales and on profits was not enough. It was all about the outlooks, and it was only the businesses that really upgraded their guidance that were beating the broader market. What have you taken away from the earnings season and the way that markets have reacted to it?
Yeah, good morning. I think you're right, Anna. It's a very strange earnings season, but I think the first point to make really is it has been one of the best earnings season in terms of amount of companies that beat estimates and by how much. That's amazing, given where we are in the earnings cycle. I mean, the other point I would take, and before we go into look at the detail, is that in S&P already Q4 numbers are exceeding the Q4 numbers of last year. So that really kind of gives us an idea of how strong this recovery in earnings can be. We are in Q4 at kind of pre-pandemic numbers, which is, again, quite amazing given the stance. But you're absolutely right. It's about winners and losers still. We're seeing fairly large gap between companies that manage to guide higher and can talk kind of very optimistically about future outlook, and they do better. I have to say the companies that beat estimates, I mean, again, given the timing of earnings season, so there is a little bit of kind of a downward pressure. Both companies that beat and miss actually prices have come down, so that has not helped. But in general, companies with better outlook still look a lot better, and there are quite a lot of them as well.
We just spoke with Ben Van Beurden over at Shell, and I know that you are not bullish oil energy producers. But we do see the price of oil rising. And Maria, I keep thinking as I read all these stories about semiconductor shortages, so many people are buying cars. Demand has snapped back there in the US. They're buying, of course, these big gas-guzzling trucks again. Isn't demand going to come back by the end of this year?
Oh, Matt, you probably talked to someone else other than me. I've been completely wrong on oil for the last 3 months. I mean, we're very pessimistic. We think that demand is still low. I mean, 60 to 70% of oil demand comes from transportation. And yes, I think you're right, it will come back, but it's coming back a lot slower. And particularly in Europe, what we're seeing is that really kind of lack of this economic and earnings momentum. So this kind of recovery probably, I mean, I wouldn't say kind of, maybe a little bit delayed. The question how much people will travel again. So I think personal travel is definitely coming back. I'm for once is desperate to go on holiday, but is my company thinking about sending me on a business trip? Probably not. So business travel is probably going to be still subdued. But that's on demand side. But on supply side, if you think about most oil producing countries, I'm sure they're desperate to increase production. We know OPEC is being disciplined for now, but ultimately, I mean, they really, really want to increase their oil revenues. So I think that's coming sooner rather than later. So subdued demand, restricted supplies, that makes me kind of long-term pessimistic. But as I said, I've been wrong on this trade.
Well, certainly you have to be right on the supply side. I wonder about the upside surprise on the demand side, because as you said, you're desperate to go on vacation. I think everybody is, everyone who can afford it, who hasn't lost a job as the result of this pandemic, has been looking to see when can I first fly away and how far can I go. how is that going to be for travel and leisure companies? How is that going to be for hotels? How is that demand jump going to be, and when?
Yeah, no, that's all absolutely right. People want to go on holiday, but then again, I mean, you can't take twice as many holidays because you haven't taken holiday last year, right? So you're probably going to go maybe on slightly more extravagant holiday because you can afford it, but you can't do 2 times as much. So that's point one, number one on holidays. But again, I mean, exactly from kind of your point of view, we want to go on holiday, we want to travel, but that needs to be probably still in a COVID secured way. So that definitely kind of going to weigh on margins of these travel companies. So if you're thinking about this kind of pent up demand, I would probably think there are better areas to invest. So things like, I mean, you mentioned semiconductors, that's probably one of our favorite areas, materials. So those sectors, they really kind of rely on the recovery, but maybe they have less kind of cost constraints, cost impediment, or more margin constraints. So I think you're right, the travel companies can do better than they've done last year. I mean, it's hard to do worse, but there are better areas of the market that can potentially outperform.
Yeah, Maria, I think I might know a few people who will plan to take 2 times as many holidays, but I completely take your point about people's ability to do that. Any kind of holiday would be wonderful, wouldn't it? Let me ask you about the tech sector, though. Another earnings story that we've been watching very closely. And when you look at some of these tech giants, and some of them are absolutely huge, they're made up of very different businesses now, Maria. And I wonder if we're going to start having conversations about, either from a regulatory perspective or not even from that, maybe from shareholder pressure. There's pressure to maybe break up some of these businesses, that maybe they'd create better value for investors if they weren't all lumped together. You have some very diverse businesses under one brand.
Yeah, absolutely. And I mean, before we go into it, I would kind of reiterate that we love technology stocks. We love them for a long time. That's been a kind of a stalwart of our investment portfolio for a number of years, and we still like it. And I think regulatory question keeps coming up all the time. It's very, very important.
Morning, everybody. I'm placing an order to sell short euro. The price I'm looking at 121. Okay. Let me show you where, because it's many numbers. Okay, this is where I'm looking to sell short euro. 121. Okay.
Some of the parts is smaller than the total, because as Anna was kind of suggesting, and we saw that very clearly from Amazon, is that so there is retail business and there is web servicing business, and quite a lot of revenue coming from each side, and they probably can live fairly independently. So breaking up those technology companies is kind of not 100% guaranteed that shareholders will lose out on it. So, I mean, we are a little bit less kind of worried about the regulatory risk. What we are more focused is that earnings potential and ability for technology company to continue to earn money. And we saw that through pandemic. We're looking forward to next year when those kind of how sticky those revenues are and how.
I will move my order to sell short euro. I have to wait a little bit longer because it moved down quite substantially. In my case, yes, it moved down. So I'll wait for a couple of more minutes and see what's going to happen with this pair. So you guys, if you follow my trades, just remove your order.
Your time this morning. Thanks so much for joining us. Maria Feitmana is State Street Global Markets Senior Multi-Asset Strategist. She's going to continue the conversation with Anna and myself. No, she's going to continue the conversation before Anna and I even get there on Bloomberg Radio at 8:45. I'm going to have to talk to a producer about that because I don't like to miss out on my Maria Feitmana time. Coming up, we're going to hear from the CFO of Deutsche Bank, James von Moltke, as the bank reports a 17% gain in fixed income trading. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 21 minutes into the session and looking at stocks that are gaining across Europe. The broader benchmark index, the Stocks Europe 600, is up 0.2%. You can see Brent crude continues to rise as we've been reporting this morning, almost $59 a barrel, 58.92. And the euro at one point slipped below $1.20. Right now it's hovering right at that level, but the euro losing some strength as the greenback gains some power. Deutsche Bank posted its first annual net profit since 2014, with a bumper year for fixed income trading. Bloomberg's Daniel Schaefer spoke with the CFO, James von Moltke.
We did see the positive momentum continuing. Our year-on-year growth in fixed income was 21% in fixed income, 28% in the investment bank last year in the fourth quarter. And we've seen that momentum carry through to the first few weeks of 2021, which is encouraging for us in terms of the outlook.
Okay. So it's a similar growth rate in what you've seen in January?
I don't want to speak to the specific growth rate. 1 month it does not make a quarter, but we're encouraged so far from the signs in 2021 in those businesses.
Okay, and how's the outlook for the full year when it comes to fixed income trading? How do you see that?
Well, as we shared with our investors in December, we do expect a normalization of the market environment in 2021. The very high levels of 2020 really weren't going to be sustainable. So a moderation of volatility, very likely a moderation of financing activity. But on the other hand, we are seeing strength in a number of different product areas. So I would expect, for example, M&A to pick up this year. As you've seen, it's been a very vibrant equity underwriting year so far. So we do expect in pockets, activity to continue. And there's also arguably a rotation back to credit and leverage finance that may take place this year, which are the sectors that were relatively the weaker performers in 2020.
Okay. The equities trading market has also seen a great year in 2020. Do you sometimes regret that you pulled out of it, or most of it, just before the boom?
No, really we don't. We made, I think, the right strategic choices. It allowed us to focus on the businesses where we truly had leadership positions. And there were certainly times, in the past 12 months where we'd felt that had our risk management focus been distracted across a broader array of products, and that we might have lost focus where it needed to be. We've been very pleased with how we've been able to manage our risks through this period of time, both on the credit and the market risk side, and also operational risk. So it is not something we regret. We think we made the right strategic choices.
Okay. You also managed in 2020 to achieve the first net profit since 2014, actually. What does this say about your turnaround plan, and also what is the profit outlook for 2021?
Sure. Well, we're talking about sort of a pivot to sustainable profitability, to see the fruits of the restructuring that we announced in July of 2019. I think we've now demonstrated both the execution discipline over the last 6 quarters, but also the success in terms of franchise improvement, initially stabilization, now improvement and growth. I think that speaks well for the momentum, as I mentioned, going into 2021. We fully intend to sustain the level of profitability and improve on it as we work to our 2022 goal of an 8% ROTE.
You have previously said that you eventually want to return excess capital to shareholders. When do you think you'll be finally able to resume dividend payments? Could it be in a year's time for 2021?
Well, we fully intend to begin paying dividends in respect of this year, 2021. Obviously subject to profitability, to regulatory approvals and what have you, but it has been part of our planning throughout to resume dividend payments in respect of this year as the first step towards a much larger 5 billion return over the next several years.
Bloomberg's Daniel Schaefer there speaking to Deutsche Bank CFO James von Moltke. I'm pleased to say we're joined now with details about the earnings story by Stephen Aarons. Stephen, good morning. So the stock was up 3.7%. Now it's down around 2.5%. What's the response been like?
Yeah, hi. Well, it's a bit of a difficult picture, I think. First of all, we had a scoop earlier this week where we sort of anticipated the trading result, so that's not a positive surprise anymore. And of course, the other units in the bank, apart from the investment bank, have not performed so well. They actually shrank last year, and people may be asking themselves, okay, what's the interest rate outlook? What does this mean for the bank? And I guess that's the question people are asking.
Stephen, thanks so much.
Right,
thanks
Stephen,
for joining us.
thanks so much for
Bloomberg's Germany bank reporter. Stephen Aarons, thanks very much for coming to speak to us. When we come back, we'll talk more about the political developments in Italy. Mario Draghi, former ECB president, front and center, of course. We'll also get reaction later from Matteo Renzi. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the session right now. Let's take a look at which sectors are on the move as the broader stocks Europe 600 continues to gain now 0.4%. We also see Brent crude rising, 58.90 a barrel is the level there, and the euro is indeed down below $1.20. Here's the group ranked returns screen on your Bloomberg. GRR Go works for any index. We're looking at it with the broader stock 600. You can see that energy is the biggest gaining group this morning after Royal Dutch Shell came out with its earnings. We had missed estimates for Royal Dutch Shell. A fourth quarter adjusted profit was under 400 million, and the street was looking for more than 650. And nonetheless, Royal Dutch Shell is up 1.5% on optimism about its cash flow. Auto and parts makers also big gainers today. Daimler continues to rise after yesterday saying it's going to finally spin off its trucks business and will henceforth be known as the car business, at least, Mercedes-Benz, which makes all the sense in the world. As far as the losers, you've got personal care, drugstores, and grocery stores as the biggest losing group. Chemical stocks are also down. Anna?
Yeah, Unilever is one of the big weights in that particular sector. That stock down by 3.7%. We'll bring you our conversation with the CEO of Unilever shortly. Also want to get to the auto story. You referenced the forthcoming IPO then of the in the German truck space. Well, we're certainly looking at an IPO that's doing really well out of Germany this morning. We've got the shares in the spin-off. Sorry, we've got the shares in Auto One Group up by 41.5% this morning. This is the wholesale platform, the biggest European wholesale platform for used cars, and it's a fascinating IPO story really for Germany, isn't it? If this sets any kind of bar, then it's a fairly high one. The stock is up substantially on this IPO debut, then up by 42% right now. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Oxford University is starting a trial combining the COVID-19 vaccines from AstraZeneca and Pfizer. It will let researchers see if 2 shots of different vaccines are better or worse than 2 doses of the same product. It could enable greater flexibility in the rollout of the shots across the world. The U.S. Securities and Exchange Commission is combining social media for signs of fraud in the rally of GameStop, AMC, and others. Bloomberg sources say the regulator is looking for posts that may have been part of an effort to manipulate the market and drive up prices. Treasury Secretary Janet Yellen will meet with regulators today to discuss the recent volatility. Protests against Myanmar's coup are growing. The military is tightening its grip on power, ordering internet service providers to temporarily block access to Facebook. Authorities have charged former civilian leader Aung San Suu Kyi with violating import laws for possessing illegal walkie-talkies. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Okay, guys, if you're into Japanese yen, it's time to sell short and place an order. Or I'm looking to sell short at 105.189. So I'm placing an order to sell short at 105.189. So all of you who want to sell Japanese yen, just place order, follow this trade, and we'll see how long it will take to get filled, and then we'll wait for profit will give us. Okay? Speak to you later.
Sales growth, and we've done well on profit and cash. The big message that we're laying out today actually is what we view as Unilever's differentiating strengths and our choices for the future. Our remarkable portfolio of leading categories and brands that's very strong in the world's future growth markets, coupled with our recognized leadership in sustainable business, seems to be increasingly proven as a key ingredient that people, especially young people, want to see in the brands that they choose. So to answer your question, because we think the world is moving in Unilever's direction, whether through our presence in these future growth markets or our focus on sustainability that consumers seem to appreciate, we are reinstoring multi-year guidance, and perhaps you can sense a slightly confident tone in my voice. It is that our big markets for the future include India, include China, include the United States, and all three of those are performing quite well for us right now.
And what is specifically inspiring confidence about those three markets?
Well, China is more or less back to business as usual. We're seeing sustained high single, low double-digit growth there. India has, after a very difficult period with the virus, is bouncing back quickly. The Indian government released their budget today, and it's one that's full of stimulus. It also is a very open budget in terms of India's participation in global trade, which we welcome. And the United States has held up very well. This US economy is in fairly good shape.
You said there that China is basically back to business. There has been some concern, as we've seen a little bit of a wobble recently with some of the economic data. How confident are you in China continuing to be the engine of global economic growth and through that corporate earnings?
You know, China's economic model is changing. They talk about it as a dual cycle, where they have their domestic economy growing, but also participating in higher value streams in global trade. So I think China's gone from being the world's cheap source of labor to the world's cheap source of manufacturing, increasingly to a place of innovation and growth in added value brands like Unilever sells and services. So yes, we see good economic health. Let me just give you one data point. Most of the 70,000 Unilever workers around the world who operate out of offices, which is about half our employee base, are still working from home. Our office occupancy in Shanghai is running at about 80%. So there's just one small data point gives you a sense that things on the ground in China are somewhat back to usual.
That was the Unilever CEO, Alan Jope, speaking to us here at Bloomberg. Coming up on the programme, Italy pins its hopes on Draghi. The former ECB president accepts the challenge to pull Italy from the depths of financial crisis. We'll get analysis of the challenge ahead. This is Bloomberg. Welcome back to the European Market Open. 40 minutes into a trading session that's increasingly positive then for European equity markets, up by 0.3% on the Stoxx 600. Energy stocks up by 0.9%. The oil price, a big feature of that, up by 0.6% this morning. In terms of US futures, they are now increasingly positive as well. So perhaps the rally is back in its stride. Now back to the European political story. Former ECB President Mario Draghi has accepted a request from Italy's head of state to try to form a government that will tackle the twin emergencies of the coronavirus pandemic and a devastating recession. Joining us now with analysis, Rosa Maria Bittetti from Luis University, where she's a lecturer. Rosa Maria, good to speak to you. It's really interesting for people who've been in financial markets for a long time, because we're very familiar with Mario Draghi. This is the first political role, though, that he has ever held, and I wonder how that is being received in Italy.
I think there has been a lot of enthusiasm among people, at least the most economically advanced and cultured people, because yes, it's true, he has he mostly had technical roles through all his life, but he has clearly shown political leadership. I think nobody will forget his whatever it takes in 2012, and now his calm and his political choices made a change for the whole crisis. So I think we can be fairly optimistic for his possible government. I mean, we have a very complicated parliamentary system, so nothing is sure yet. He still will have to deal with the parliament that is very fragmented and it has a very different perspective probably on how to reform Italy from the one he has been suggested as a technician at the ECB, but still a man with such a competence and such a strong leadership cannot make us optimistic about the future of Italy.
He does exhibit so much strength and power, Rosa Maria. At the same time, he's famously reserved, but also amiable and altruistic. What kind of effect do you think he's going to have on politicians who are especially populist and alarmist? Is he going to be able to calm them and contain them?
Okay, so we have two things going on here. First of all, there is a call to responsibility, which has been done by our President of the Republic. It's very hard right now to go to elections because of the pandemic, and you as American know something about how problematic that can be. And we don't even have ballot voting, so you can imagine. And on the other hand, we have a strong political skepticism. Nobody of the main parties, and we have three at the moment, wants to go to the election. So I think that for some reason they're going to try to cooperate with this government, either for responsibility or for opportunity. On the content of his policies, that is going to be more problematic, because a lot of the much needed structural reforms for Italy are going to be clearly against the platform of the main parties, both Lega with his early retirement scheme and Movimento 5 Stelle with his citizen income policy. So we will see whether they're going to be able to cooperate with Draghi or whether they're just going to use him as a target of their new populistic campaigns. But even though and that's harder, he will not be able to tackle long-term issues of structural reforms for Italy. We still feel more confident at the idea that somebody with Draghi standing will be dealing with the current crisis of the pandemic and of the economic recession.
Yes, I was going to ask you, Rosa Maria, is the focus going to be very much on those short-term challenges, those huge short-term challenges that Italy faces around coronavirus, just like many other countries, of course? Or is he going to be able to tackle some of the long-term productivity factors that perhaps he spent a lot of time thinking about in his background at the ECB?
We don't know. This is all going to be a political play done in the parliament with the current forces. I think that, again, as you mentioned, he has been thinking about this for a long time, even from the ECB. I'm sure he has a vision, he has a plan for reforming Italy. how likely that is going to be happening, and what's more important, how likely is that it's not going to be reversed soon after this technical government is over. It's going to be something for the future to say, because it's quite common that technical government to do harsh, unpopular reforms in time of crisis get reversed soon after by more populistic government. But since we have a 2-year horizon, which is short but not too short, probably if we can manage better the pandemic, and it's not going to be difficult. You should remember that Italy has the worst numbers, both of that for deaths and for economics.
Okay, ladies and gentlemen, as you can see, we opened position on Japanese yen. Well done, all of you who follow this trade. So this is short, just right here, Japanese yen. See you later.
Well known and much appreciated. It's an uncontroversial figure. Among the less educated people, I don't know how well it's known. Recent surveys gave its popularity and consensus up to the level of Conte, the former Presidente del Consiglio. So I don't think it's unknown. But I also think he has the personal characteristic. As you were mentioning, he's strong, he's very good at communication, but he's also humble and reserved to be liked by the population. And remember, the way he was named the market whisperer. So I think he has a very strong charisma, and even though he's not well known yet, he will be appreciated in the future. At least this is the hope.
Rosa Maria, thank you very much. Rosa Maria Bittetti from Luis University joining us there to give us her analysis on the Italian political story. And don't miss our interview with the man who brought down the Italian government most recently. We're going to be speaking to the former Prime Minister Matteo Renzi at 9 a.m. UK time. Francine Lacroix will be bringing us that interview. This is Bloomberg. Welcome back to the European Market Open. 50 minutes into Thursday's trading session, increasingly positive, increasingly US futures also point to the upsides. We did have negativity through the Asian session, but things turning around just a little bit. Now, GlaxoSmithKline and CureVac have joined the rush to develop a new generation of vaccines against COVID-19 variants that could make the first jabs less effective. But in an exclusive interview with Bloomberg, the CEO of CureVac has warned that vaccine nationalism could undermine efforts to produce these shots.
This is also great work for the regulatory authorities, but they are also looking into, can you do something like a flu season, that you also in the flu season, you don't start with a phase 1, 2, 3, because otherwise this flu season would be gone until you've got the data. And so it's a kind of adaptive process, and we are all learning in this regard.
Let's talk about finish and fill and all the other aspects of the logistics that go into making this all work. Clearly, finishing has been a huge challenge for a lot of people in terms of getting their vaccines out. Where are you with this? What are you short of right now? Where are the bottlenecks in the process?
Yeah, that's really a great question. So it is, what you can see, it's really a cross-industry effort what we're doing right now. There are fill and finish, which is, you can see it like generic, that you can fill and finish, you need to adopt the processes, of course. But then it comes again, there has been no big mRNA manufacturing so far because it was not needed. And now we are talking about big quantities, so you have to think about the starting material to get it from, which was not available at the time because there was no need. The same as with the LNP. So this is the molecule where you wrap the RNA into. These lipid nanoparticles are composed of different components. This is also what you need to find then. And as there are 3 vaccine players, at least 3, and 2 vaccines are already approved based on mRNA, hoping us to be the 3rd one. And there are huge quantities, and therefore you need to adopt the supply chain there as well. And this will take an effort there as well. And this is where you see the bottlenecks at the moment.
Doctor, one final question here. There's been a lot of conversation in Europe about vaccine nationalism, confusion about export restrictions, export monitoring. What's your take? How does that affect your production?
Yeah, it's a bit what I said, that you need your starting material, all the material which is also produced globally. The world is a global village, so to speak. And then certainly if you're missing certain parts and you can't get it out of a certain country because there are export restrictions or whatever, because they want to keep it for yourself, this is a bit where it certainly is a bit struggling. And then it enters also to the political level to find solutions in this one. Because one thing is quite clear, we need to vaccinate the world entirely in order to get rid of the virus, because otherwise the virus is coming back, and then we are talking about new mutations again.
That was the CEO of CureVac, Frans van der Haast, speaking exclusively to Guy Johnson and Alex Steele. Joining us now to talk more about markets is Eddie van der Velde, our Markets Live editor, who has a macro view column out today about the possibility of a Minsky moment. How terrifying. Eddie, explain what a Minsky moment is.
Oh, I can't take full credit for that one. I was the editor on that one. Colleague Laura Cooper wrote that one. But look, a Minsky moment is the idea of us going into exuberance building up so much that we get to a point where even a hair trigger could bring markets to a collapse. And I think we really are starting to see people getting very nervous about very little things. The squeeze of GameStop last week was a case in point. The exuberance that brought that about was one thing, but the second order effects of that across wider markets, just looking at how nervous markets got about the ability of this group of Reddit and Twitter traders to push stocks around. I think that just shows you that markets are starting to worry that stocks are becoming a little bit bubbly. We're looking at Bitcoin, we're looking at silver, we're looking at GameStop. Everywhere there's these little bubbles. Exactly, and you just wonder whether it's all going to form one super bubble and burst at the same time.
Eddie, really good to speak to you. And I wanted to reflect on the fact that you told me earlier on this week that the silver drama was going to last till, maybe Wednesday, you said. And there, lo and behold, it did. So I just wanted to give you credit for that particular call. But also to get your thoughts on a slightly higher US 10-year yield and what impact that's having on other assets. Sure, the yield is down a little today, but it's been getting higher, and we've been talking more and more about reflation trades.
Right, exactly. And don't forget, next week is really going to be inflation week. We're getting a lot of inflation data out next week. And I think that trade is coming back. The two backbones of the discussion at the moment is the vaccine trade and the reflation trade, right? And I think those two have really come back to the fore. We had this little bit of a distraction, as you said, at the end of last week with the retail trade and the silver trade and all of that. But I think it's all coming back to those two main themes. And yes, I think higher yields, interesting. It depends on what it does for the dollar. If we start seeing the dollar lift, that could be worrying for markets.
Yeah, I was thinking about the dollar today as it rose, although futures were up, and I wondered if that was if that correlation had turned around. Can we still be confident that when the dollar rises, we're in a risk-off scenario and vice versa?
I think if we do see an actual dollar short squeeze here, because the dollar has an actual short squeeze or short position to squeeze. I think if we see that, I think a lot of people will be caught offside. So I think there will be a lot of money that will have to, a lot of long positions elsewhere that would have to be, cut to service that short squeeze.
Well, all right, Ed, thanks so much for joining us. Eddie Vanderwalt there, Markets Live editor. That's it for the European Market Open. Surveillance is up next. This is Bloomberg.
Treasury curve steepens on stimulus expectations. Loretta Mester says policy is in a good spot. James Bullard expectations. Loretta Mester says policy is in a good spot. James Bullard doesn't suggest tapering yet. UK officials say the latest virus wave has peaked. Attention turns now to the Bank of England's decision today. And former ECB chief Mario Draghi is hauled out of retirement to lead Italy in its times of need. We have not one, but two former prime ministers on the show this hour. We'll talk to Matteo Renzi and then Mario Monti later. Well, good morning, everyone. A packed show, as always, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, quite a lot going on in the markets. Remember, there's also quite a lot of data out of the U.S. a little bit later on. The focus, of course, is on the steeper yield curve, exactly what that means, at what point the reflation trade continues, and actually at what point it takes a breather. Now, if you look at Deutsche Bank, I have to say this is one of the biggest earnings stories today, so we'll spend a little bit of time on the banks as well, but stocks edging higher, a lot of the debate surrounding once again the stimulus in the U.S. and the Treasury curve steepens to this level seen, I think last time was February 2016. Now let's get straight to the Bloomberg. First word news, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK has vaccinated about 15% of its population and has passed the peak of the latest wave of the pandemic. But the government is warning infections are still alarmingly high. Britain is on track to inoculate about 15 million in the highest risk groups by February the 15th. The U.S. Securities and Exchange Commission is combing social media for signs of fraud in the rally of GameStop, AMC and others. Bloomberg sources say the regulator is looking for posts that may have been part of an effort to manipulate the market and drive up prices. Treasury Secretary Janet Yellen will meet with regulators later today to discuss the recent volatility. Protests against Myanmar's coup are growing. The military is tightening its grip on power, ordering internet service providers to temporarily block access to Facebook. Authorities have charged former civilian leader Aung San Suu Kyi with violating import laws for possessing illegal walkie-talkies. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, the Bank of England officials meet today to review interest rates. The majority of economists expect no change from the central bank's current page of stimulus. So with the very latest on the market moves, steeper yield curves and the Bank of England, before we go to Italian politics, is our Danny Berger. Danny, what do you have?
Well, Francine, we have to keep in mind that today is a much different scenario than when the market makers first were confronted with the BOE's meeting back in November. The short-term picture definitely has turned more dark. So we're expecting to see the BOE trim their forecast for the first quarter. Now, it doesn't necessarily mean they're going to take action today. In fact, Bloomberg Economics assumes that they're going to look sort of on the brighter side of things and not take any action in terms of cutting rates or changing their bond buying program, but still, they have to factor in this PMI picture of things weakening. But when it comes to negative rates, the market now does not see the BOE moving in that direction, at least anytime soon. All the bets are no cuts beyond 10 basis points, which is where we are now. So again, the things to look out for, a cut to the short-term economic outlook in the first quarter, and their results on the study of negative rates, which we're not likely to see them move towards, Francine.
Thanks so much, our Danny Berger there with the very latest on these quite exciting market moves, actually. Now, Mario Draghi has agreed to try to form Italy's 69th government since 1945. The former prime minister, or the former president, I should say, of the European Central Bank faces the twin emergencies of the coronavirus pandemic and, of course, a devastating recession. My guest this morning is a key player at the heart of the recent Italian political story. After serving as mayor of Florence, he became secretary of the Democratic Party in 2013 and then, of course, prime minister of Italy the following year. In 2019, he also set up the Italia Viva party, whose support Prime Minister Giuseppe Conte relied on. He withdrew that support last month, bringing down Italy's government. So to talk about the current situation, I'm very pleased to say, is a former Italian prime minister and head of the Italia Viva party, Matteo Renzi. Mr. Renzi, thank you so much for joining us today. You withdrew support from the Conte government, and this is where we are. The markets actually like it. The economy could be in a better place. Was this your plan all along?
Good morning, Francine. But I think now for Italy, we open a new page. We can write a new page because, of course, we had a very great chaos in the history of our institutions. Unfortunately, we have a system in which it's normal to change every year a government, and that is absolutely crazy. But we are in this condition because we didn't change the constitution in the past. Now the situation is clear. We have a great recession, a terrible recession, a devastating recession. We have at the same time a crisis in pandemic, and the third, we have a crisis in the schools, in the education, because we are the country with the worst level of the number of days of school open. So what means that? We need a change. After Giuseppe Conte's government, I think it's time to give the country in the very good hands. Mario Draghi is the best man to be prime minister. He saved the euro, he will save Italy.
Matteo Renzi, what are the chances, first of all, of Mario Draghi actually having a winning parliamentary majority?
Absolutely. I think now is normal. There are some troubles in the political debate, but I'm sure Mario Draghi will have a vote of confidence, I don't know, what, probably the next week, and will be able to write a recovery plan, 209 billion for Italian economy, who is the most important decision of the European Union. He will be able to help Europe in the vaccination campaign, because Europe had a very great reaction in economy, but unfortunately in vaccination campaign Europe wasn't good, and Mario Draghi is not only a good Italian leader, but will be a very important European leader, was and will be a very important European leader. And then I think from the next week we will have a new government with an unbelievable man, the right man in the right place.
So what do you think the government will look like? Is it politicians? Is it, technocrats? Is it a little bit of both?
I don't know. Probably the most important model for Mario Draghi will be the former example of Carlo Azeglio Ciampi in 1993. When Carlo Azeglio Ciampi, a former governor who became prime minister, saved Italy's economy after Maastricht agreement. But let me be very frank with you, Francine. You can write everything about Mario Draghi. Mario Draghi is a civil servant, was a member of ECB, the chief of the ECB. But Mario Draghi is, of course, a technical profile, but is a man with a great political intelligence. So I don't know if we'll choose a minister from politics, from technocrat, I don't know. But I'm sure he will be able to have a great political leadership. So I don't care about the cabinet, because I'm really, really confident about the role of leadership and the vision of Draghi. Also because this is the last chance for Italy, because 209 billion of euro from Europe probably is more than Marshall Plan. Is more than Marshall Plan after the Second World War II.
If Mario Draghi fails to form a government, what happens?
This is not a possibility. Mario Draghi will do, and no one in Italy think that will be possible, that there is a possibility of failure. Also because, let me be very clear, we are very attacked as Italia Viva, my party, my leader party, because we opened the crisis 1 month ago. But really, the situation in Italy was very problematic because everything was totally blocked in the vaccine, in the economy, in the school, in the education, in the jobs. Now, President of the Republic, a very wise man, who is Sergio Mattarella, decided to give this commitment to create a new government to man who is a man absolutely super partes. This is a Latin expression, means a man out of box, out of every type of polemics. So there is not possibility of a failure for Mario Draghi, and I think Mario Draghi really will be able to give to Italy 2 years, and in that period, I think we will have a lot of opportunities for Italy, but also for EU. Don't forget, we will have election in Germany, September 2021, election in France, very important, in April, May 2022, and then, only then, election in Italy in 2023.
Matteo Renzi, if you see Mario Draghi staying on for 2 years, that's until 2023. Would you not support him to become president of the Republic in 2022 when the current president will have to step down?
Please don't run now. Now the priority is guaranteed to President Mario Draghi the possibility to create a cabinet and the government and to have the vote of confidence. In 2022 is correct. I agree with you. There is a very important moment will be the election of President of the Republic. But I think for respect to President Mattarella, to President Draghi, to everyone, it's important now don't speak about also the election of President of the Republic. I think for one of the people who follow your very good program, your very good show, a lot of people think, oh, but it's very difficult to understand Italian politics. Yes, is it? And it's impossible. It's very difficult also for us, for the politicians, for the people involved. But please, now the message is very clear. After a lot of troubles, Italy is in hands, in the very good hands, not in populist hands, but in the hands of Mario Draghi. For me, that is an unbelievable message of hope.
All right, who do you see as finance minister?
I don't know. And particularly, if you call Mario Draghi as prime minister, you cannot decide who will be the minister of finance. And I'm so happy because for me, now it's time to relax and support only Mario Draghi. So I don't know who will be the next minister of finance. I don't know who will be the next minister in every sector. But please, if you think about market, if you think about financial markets, you know absolutely better than me. You know the financial community. Everyone yesterday opened a bottle of champagne, no champagne, Italian wine, to give a very great message of confidence for the future after the decision to involve Mario Draghi. And Mario Draghi will appoint as Minister of Finance absolutely a good guy, a good man, a good woman, I don't know who, and he will decide. I'm totally confident about the capacity of Draghi. Please, that is not blind hope, is a very clear message. Draghi was the man during the crisis of euro who saved the euro. And it's interesting because in Italy, a lot of people think in the past, oh, Europe is our problem. And that is not true. Europe is the only our possibility to exit from our crisis. So Mario Draghi in that is absolutely the symbol because he is an Italian who saved the euro and is an Italian who will save our country.
Matteo Renzi, thank you so much. I can tell you that there was so much chatter actually on the markets about the fact that so many market participants heard Mario Draghi always speaking English and they didn't hear. It was the first time many of them actually heard him speak Italian yesterday. The former Italian Prime Minister there and head of the Italia Viva party joining us this morning. Thank you so much. Now, coming up later in the program, we'll also speak to a Prime Minister who steered Italy in the wake of the European debt crisis, actually the last technocratic government. Our interview with Mario Monti at 9:30 a.m. London time. This is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get back to the markets, and the Treasury curve has reached its steepest level in almost 5 years as expectations for more stimulus overshadows the government's decision to leave auction sizes for long-term debt unchanged. Well, joining us now to talk about the markets, and he's also a bit of an expert when it comes to, I don't know if it's Italian politics, because I don't know if there's such a thing, but certainly in the Italian economy and markets. We're delighted to be joined by Francesco Garzarelli. He's head of macro research at Eisler Capital. He was previously co-head of macro markets research at Goldman Sachs. So Francesco, as always, thank you so much for joining us. When you look at what's going on with the Treasury and that steepening yield curve, what does it tell you, first of all, about the reflation trade and how long it could last?
Well, it tells me, first of all, that the Fed is being heard and it's being effective. We've seen throughout last year gradual normalization of inflation. That's a good thing. If you look at where inflation is priced now, it's about 2%, with the distribution of expectations pretty much where it was in 2018, which was a hot year for the economy. And I think now it's a more challenging part of the reflation trade for us in the investment business, because you really have to think that the Fed not only succeeds to keep inflation at 2, but actually overshoots in order to make up some of the lost ground since the crisis erupted. And that's a very big economic question.
Francesco, where do you see that playing out? So it's playing out in the Treasury market, it's playing out in bonds across the world. Does it actually, and actually also equities, is there a danger that we're getting ahead of ourselves? Where does the inflation actually come from? Is it the stimulus? We still don't know what happens in the U.S., or could we be importing it from China?
It's a bit of everything, to be honest with you, Francine. I think, as I said, the market has kind of summed up all these things, the policy, a bit of goods inflation, which originates from bottlenecks, a bit of base effects. It's all in the price. And I think the price now is fair for what we know. And I think if you look at how the market responded to reflation, it's very much around the fiscal stance. I think the market wants to understand what's happened to fiscal policy. And there I would draw an important distinction. So far, fiscal policy has essentially filled a hole in incomes left by the COVID shock. So we transferred resources from the future into the present in order to make people, bridge finance people's finances. Now, some in the market say there's pent-up demand that once we reopen the economy, that will, translate into a bigger spending and upward pressure on prices. But if it's just that, it will fizzle out eventually. And I think on the fiscal stance here, and here's the distinction, rather than filling holes, we need to see governments building ramps for the next phase of the expansion. And that means, infrastructure, spending, entitlements, and whatnot. And that, I think, is ultimately very inflationary, considering especially this combination with monetary policy. So I'm bullish there.
Francesco, you're bullish. What does it mean for European bonds, and actually, specifically the situation in Italy, given what we're seeing in terms of politics?
Oh, that's a great nexus, Francine. I think, look, in Europe, I said the distribution of expectations in the US is normalized. In Europe, we're far from that. I mean, give you an example. If you take the probability the market discounts of inflation being below 1% over the next 5 years, in the US, that's about 10%. In Europe, that same probability of inflation staying below 1% over the next 5 years is about 50, 60%. So the market has a great skew on the left tail of the inflation outcome distribution, and that is an opportunity for us investors. I mean, if we get fiscal policy and monetary policy combined, there should be a little bit more inflation than what the market discounts. So it's a bit like a trade that we had in the US last year. played out in Europe this year and next. Italy, and how does it relate to this? Well, I think it's epochal, and we just heard from Matteo Renzi in your great interview. In Italy, he mentioned Ciampi. In Italy, technocrats have always been brought in essentially to tighten fiscal policy, and that was a good trade for creditors of Italy. It was a BTP trade.
Yeah.
Here we have the exact opposite. BTPs are just fine. I mean, their yield is paltry, like every yield in the world. And Mr. Draghi is being called in as a technocrat to direct a fiscal expansion. This is kind of the opposite of what we've seen in previous technocrats. He's been called in to reflate the economy. He's been called in to have a greater chance of Italy absorbing that fiscal stimulus. And it's bizarre that politicians don't do it themselves and have to call in an expert. Probably everybody wants to jump on that bandwagon, and you need some discipline. But in terms of fiscal finance, structural finances, I think it's not that great, because I don't think Draghi, in order to win majority, will have enough time to really do something material as Ciampi did. But he will be offering, obviously, plenty of goodwill, plenty of credibility, and again, play into the reflation trade. So Italy, to me, is an equity.
Yeah?
Yeah, continue, Francine. Sorry.
No, Francesco, finish your thought, because then I want to talk about GameStop and Bank of England. But your thoughts on Italy, you like equities?
It's more of an equity trade. It's a reflation trade, rather than a classic trade that we've been used to, where spreads tighten, balance of payments swings in positive territory. I mean, we have all of that. It's really getting Italian wages up and getting industry started again. And so that's more, to me, a credit trade, an equity trade, an Italy Inc. trade, than it is a BTP trade, particularly from these levels. So that's how I see it, and it's a completely different playbook from what we've seen in the past.
Francesco, I want to talk to you about GameStop. So it's been, frankly, a wild ride on the markets in the last 10 days. Is there something that made you uneasy? Is there a systemic risk out there? Are we going to see regulation? How do you see this playing out in the wider world on a longer horizon?
Well, there's a lot in there, Francine. Look, I think you mentioned systemic risk. I frankly, at this point, don't see them. I've been trying to think hard with the group at Eisler Capital about whether this could, command more systemic relevance. I don't think it does, but it does highlight, I think, something that dovetails with a lot of other conversations happening in markets, which is around market.
Well, as you can see, I placed line. This is the line, the contract we purchased days ago for Japanese yen at 105.083. So the reason I pointed out basically right now that I'm looking to place stop on profit for this pair at the price 105.183. Okay, so we hold two positions, one short position and one long position. And on long position, I'm placing a stop on profit at 105.183. I'll point out okay, that's it. And if it will move the other direction, it means that I will sell and I will collect the profit. Okay.
Once there was a smoking gun, when there was a problem, and that when the politics and the regulatory momentum coincided, and you got the change.
I'm sorry, I'm doing like around the world in 7 minutes, but in 30 seconds, what happens to UK assets if the Bank of England goes negative?
Well, you know, I think it's a very smart thing they're doing because UK, a bit like the US, until they brought this up, couldn't price negative rates. And now, instead, the cone of possible outcomes will include negative. And I think today we'll find that out. It will steepen the yield curve. And I think it just offers them more leeway on the currency on a number of dimensions. So I think it's an important change for them. So well done there.
Francesco, thank you so much. Francesco Garzarelli, their head of macro research at Esler Capital. Now, coming up, we also speak to another Italian former Prime Minister, Mario Monti. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash and World News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Oxford University is starting a trial combining the COVID-19 vaccines from AstraZeneca and Pfizer. It will let researchers see if the two jabs of different vaccines are better or worse than two doses of the same product. It could enable greater flexibility in the rollout of vaccines across the world. Over in the US, President Joe Biden says he will not retreat from his promise for $1,400 stimulus checks, but he is opening to tightening up the eligibility rules. In the past two rounds of aid, people earning up to $75,000 could get the full payment. Democrats are now weighing lowering the cap to $50,000. And the first major tennis tournament of the year has been hit again by the pandemic. Hundreds of players, coaches and staff are now in isolation after a hotel worker tested positive. Melbourne had gone 28 days without a new infection, but everyone staying at the hotel is considered a potential contact and now has to go into quarantine. So the Australian Open was due to start on Monday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, Deutsche Bank has posted its first annual net profit since 2014, with a bumpy year for debt trading. Well, Bloomberg's Daniel Schaefer spoke to the Deutsche Bank CFO, James von Moltke.
We did see the positive momentum continuing. Our year-on-year growth in fixed income was 21% in fixed income, 28% in the investment bank last year in the fourth quarter. And we've seen that momentum carry through to the first few weeks of 2021, which is encouraging for us in terms of the outlook.
Okay. So it's a similar growth rate in what you've seen in January?
I don't want to speak to the specific growth rate. 1 month it does not make a quarter, but we're encouraged so far from the signs in 2021 in those businesses.
Okay, and how's the outlook for the full year when it comes to fixed income trading? How do you see that?
Well, as we shared with our investors in December, we do expect a normalization of the market environment in 2021. The very high levels of 2020 really weren't going to be sustainable. So a moderation of volatility, very likely a moderation of financing activity. But on the other hand, we are seeing strength in a number of different product areas. So I would expect, for example, M&A to pick up this year. As you've seen, it's been a very vibrant equity underwriting year so far. So we do expect in pockets, activity to continue. And there's also arguably a rotation back to credit and leverage finance that may take place this year, which are the sectors that were relatively the weaker performers in 2020.
Okay. The equities trading market has also seen a great year in 2020. Do you sometimes regret that you pulled out of it, or most of it, just before the boom?
No, really we don't. We made, I think, the right strategic choices. It allowed us to focus on the businesses where we truly had leadership positions. And there were certainly times, in the past 12 months where we'd felt that had our risk management focus been distracted across a broader array of products and that we might have lost focus where it needed to be. We've been very pleased with how we've been able to manage our risks through this period of time, both on the credit and the market risk side, and also operational risk. So it is not something we regret. We think we made the right strategic choices.
Okay. You also managed in 2020 to achieve the first net profit since 2014, actually. What does this say about your turnaround plan, and also what is the profit outlook for 2021?
Sure. Well, we're talking about sort of a pivot to sustainable profitability, to see the fruits of the restructuring that we announced in July of 2019. I think we've now demonstrated both the execution discipline over the last 6 quarters, but also the success in terms of franchise improvement, initially stabilization, now improvement and growth. I think that speaks well for the momentum, as I mentioned, going into 2021. We fully intend to sustain the level of profitability and improve on it as we work to our 2022 goal of an 8% ROTE.
You have previously said that you eventually want to return excess capital to shareholders. When do you think you'll be finally able to resume dividend payments? Could it be in a year's time for 2021?
Well, we fully intend to begin paying dividends in respect of this year, 2021. Obviously subject to profitability, to regulatory approvals and what have you, but it has been part of our planning throughout to resume dividend payments in respect of this year. As the first step towards a much larger, 5 billion return over the next several years.
Well, that was Bloomberg's Daniel Schaefer speaking to Deutsche Bank's CFO, James von Moltke. Now, Mario Draghi has agreed to form Italy's next administration. As well as a devastating public health crisis, the former ECB president faces a deep recession and an unprecedented buildup of government debt. It's a situation, of course, which mirrors that faced by Italy when my next guest became prime minister. In 2011, he took over leadership of the country with Italy near bankruptcy, a situation which risks the collapse of the entire European single currency. Well, I'm very pleased to be joined by Mario Monti. He's president of the Bocconi University, an Italian senator. He served as a member of the European Commission in charge of internal markets in 1995, and then, of course, as Italy's prime minister from 2011 to 2013. So, Senator Monti, thank you so much for joining us. What would be your number one piece of advice to Mario Draghi today?
Simply to be himself. I think it's more important to give advice to the Italian political parties, which I did in an article in the Corriere della Sera this morning. That is, unlike the impression that political parties may have, for each, I say each of them, it will be convenient, it will be a wise move to take part in the Draghi majority to be built up, because not only as a sense of responsibility towards the country at a difficult time, but because this government, unlike the one I had to form and chair 10 years ago, is not there to ask sacrifices of Italians. It is there to orderly set up a plan to use 200 plus billions of euros prepared for Italy by the European Union in the context of the recovery and the resilience facility. So both from a point of view of the sense of responsibility towards the country and future generations, but also from the narrower self-interest perspective, it would be a big political mistake for parties not to be constructive and to join this majority.
So, Mario Monti, given what you've just said, do you think Mario Draghi has an easier task than you did at the time? And how important is it, you know, the composition of the government? Does it need to be technocrats and politicians, or is one better than the other for his survival?
Well, I don't attach a lot of importance to this distinction, but well, I can tell you what I tried to do when I became prime minister, and that was to compose a government made up of various politicians from, in my case, it was mainly from the right of Silvio Berlusconi and the left of Bersani. I had in mind to ask themselves, the bosses of the parties or their deputies, to become minister in my government. It's indicative that they gently, politely declined. So I had nevertheless a very strong team, but without professional politicians. Why did they decline? Because they knew that in that situation, with the spread around 600 basis points vis-à-vis Germany, we were necessarily to practice restrictive policies and quick structural reforms, which we did, and the country did not go bankrupt. So even in my case, it was meant to be a government with politicians. They refused.
But your popularity, Mario Monti, certainly in Italy, maybe not outside, waned because of the measures that you had to take. Does Mario Draghi need to worry about his popularity going forward?
Well, he is in a better situation in the sense that, as I just said, he will not have to take the drastic measures that a government like mine, for example, had to take. And those are the measures that erode popularity. But at any rate, I'm sure a personality like Mario Draghi with such an immense global and Italian reputation must not, and I'm sure is not, calculating in terms of popularity. If I had done the same thing, I mean, to reason in terms of popularity, obvious, I would not have accepted to government in those conditions. But I think it's for personalities like us outside of politics to build credibility during our lives, and then, if the occasion comes, try to put it at the service of the country, even if it is eventually eroded.
What do you think Mario Draghi's biggest, difficulty will be? I mean, this is, dealing with the economy, which he's very expert on. I don't know whether, there's someone that you would see as a good finance minister. But the other question is, of course, the rollout of the vaccine, which is different skills. It requires a different skill set.
Yes, that is certainly a difficulty which, for example, at my time was certainly not there. So clearly he is not an expert in pandemics or health policy. But I believe that there are aspects of organizing the response to the pandemics where the previous Conte government has not done a bad job, but I'm sure that much better can be done. Obviously, Draghi will not be able to contribute with his skills or experiences in that, but he has a strong personality capable of attracting talents, disciplining the collective work of a team, which of course will have to include somebody more in tune with those specific requirements.
Who does he need as finance minister? Or actually, is it irrelevant because Mario Draghi is, the finance person?
Well, I think he will not have much time to devote to the management of the finance portfolio, and he may not even have the need which I had and which led my government under the aegis of President Napolitano to decide that for many months, 7 or 8 months, I was both Prime Minister and Minister of Finance, although Vittorio Grilli, as Deputy Minister, did a lot of the job. But the effort was to transfuse immediately the presumed credibility of the Prime Minister, the certain credibility in the case of Prime Minister Draghi, into the financial discussion tables, into the marketplace. But I think that it's not on that
everybody, it's Tony Robbins again.
Probably sick of seeing will be really challenged.
Thank you so much for joining us this morning. Mario Monti there, the president of Bocconi University and, of course, former Italian prime minister. Now, coming up, it's been a pretty wild ride in the markets. A sell-off at the start of the week wiped some $16 billion in market value from U.S. retailer GameStop. But with what do these dramatic moves mean for the commission-free trading model? Yes, we'll speak to the co-founder of Free Trade. That's coming up shortly. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, no-fee stock trades can exact a high price, not only for the retail traders sitting on losses from speculation on stocks, or for Robinhood, which faces scrutiny for gamifying the frenzy that spun out of control. The stock market more widely, of course, has to deal with the volatility this democratization brings. So what's the future of zero-fee trading after the wild ride we've seen in the past 10 days? Now, for more, I'm delighted to be joined this morning by Victor Nabahar. He is CMO and co.
If you're looking to sell Canadian dollar, there's your chance. So all of you guys who are looking to sell it, you need to place an order to sell at 127.93. Let's see if it will get executed. This price, 127.93. Short order placed, and we'll see.
Sometimes called meme stocks in the media. That can certainly happen in Europe as well. There are a high number of brokerage, commission-free brokerage users at this point. We ourselves at Freetrade have over 500,000 registered users, and the financial system is fairly connected globally, so it can certainly be replicated.
How much more trading interest have you had from retail investors in the last 10 days? Is there a direct correlation to what we've seen with GameStop, with people wanting to trade on free trade?
Yeah, definitely. We've seen insane demand, and for context, we've been growing rapidly since last year. We added 40,000 registered users in December, and in January we added something like 166,000. So we've seen really high demand, and what we are experiencing these days is that these customers stay around and they invest in other stocks as well. So the way we look at this GameStop phenomenon is that it's fundamentally good. First of all, we believe in the fundamental right of retail investors to make an educated decision in what they invest in and act on that decision. And we don't see that as a mindless mob. We see it more as a movement, honestly. And we think this movement is fundamentally good because when you look at the stock markets for a long enough timeline, that's a really good way to increase your wealth. So a lot of people got switched on to investing.
So, Victor, how much bigger do you expect this to be? If you look at some of the things free and accessible to all, is this market going to double in size, triple in size, and what are some of maybe the pitfalls that you worry about?
Yes, so it can multiply in size.
Well, tough luck. Yeah, we couldn't execute the order. It just get close to 127.93, but unfortunately. And we need to cancel it. Let's wait for another time. Order cancel, so you guys, you need to cancel order because the momentum and direction already started down. Let's wait for next time when it will give us chance, opportunity to enter the trade. I'll let you know.
Necessarily ready to take a rapid, unexpected increase in customers. So that's definitely something to look into. We as a company definitely did our best to keep systems running. It was challenging, but we managed to survive with only 2 outages.
Victor, do you worry that people will take undue risk because looking at GameStop, they think that they can make money so quickly that this is kind of the central expectations that they can replicate GameStop, where actually because it's been done once, it'll be much more difficult to replicate?
Definitely. Running a retail brokerage, that's something that has to be on your mind all the time. The risk customers may or may not undertake. And the best approach, we as a platform, because we are agnostic in terms of what people buy, but the best approach we can take is educating our customers. So half of our team basically went into crisis mode and started to send out messages about the potential increased risk these stocks represent. And it's very important that people understand that quick gains, they are not natural, they are not guaranteed, far from, and the best way to look at investing is a sustained long period of time, developing a healthy habit of investing every month, pound cost averaging. That's what we educate our customers about.
Victor, thanks so much for joining us. Victor Navajo there, the CMO and co-founder at Free Trade. Now, coming up, UK officials say the latest virus wave has peaked. Attention now turns to the Bank of England for today's rate decision. We'll look at what it means for gilts next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Well, let's take a look at what's moving the equity markets with today's biggest movers. Here's our Danny Berger. Danny, a lot going on.
A lot going on, that's for certain. A lot of individual company stories, one of which is Bayer, which is the biggest mover to the upside on the Stock 600 today. They submitted a proposal to U.S. judges to settle the rest of the Roundup lawsuits that the weed killer causes cancer for $2 billion. They reached an agreement with the defense's plaintiff's lawyers, rather. A prior agreement last year was rejected for about $1.25 billion, but still optimism that that will get done. Unilever declining today. They did upgrade, go back to their prior growth target. However, rising costs, that's why that share is falling today. And finally, Commerce Bank also rising costs here due to restructuring to make them profitable. Also, the cost of the healthcare issue, the healthcare pandemic as well. And overall, they wiped out 2.9 billion euros in 2020, Francine.
Danny, thank you so much. Danny Berger there with all of the big moves in the markets. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. We'll, of course, look at the yield curve, all about the yield curve data in the U.S. We also look at a little bit of Italian politics and, of course, Deutsche Bank. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
The Treasury curve steepens on stimulus expectations. Loretta Mester says policy is in a good spot. James Bullard doesn't suggest tapering yet. UK officials say the latest virus wave has peaked. Attention now turns to the Bank of England's decision. And the former ECB chief, Mario Draghi, is hauled out of retirement to lead Italy in its time of need. The former Prime Minister, Matteo Renzi, tells us he expects Draghi's government to be in place by next week. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacroix here in London, Tom Keene in New York. Tom, we also have quite a lot of data out of the U.S. We were just looking, actually. You know what reminded me? We were looking at pictures of Mario Draghi speaking in Italian yesterday. The amount of messages I got from market participants who said, I've watched 150,000 of his press conferences. Never have I heard Mario Draghi speak Italian.
Yeah, well, there it is. And I mean, to me, it's actually a really curious thing. What did you learn from your hat trick of prime ministers, Francine?
Yeah, I learned that actually I think there's too much optimism out there. There's so much optimism that, he's the right man for the job, which, he has all the competences. But as you know, Italy is complicated politically, and it's unclear how he will form a government that can stay longer to actually push the reforms needed. Tom, the other thing we need to watch out is, of course, the yield curve. I mean, if you look at that, this is the reflation story. We've been talking about it, and I know you have some great charts for us today.
Yeah, well, absolutely. Bring up the euro right now. This is important, folks. This is not a ginormous 4 standard deviation drama move. But, Francine, along with the steepening yield curve, we've seen the euro move from +2 standard deviations to -2 standard deviations, which is a 4 standard deviation move across the plane. These are abrupt moves, and they're really beginning to add up into tomorrow's jobs report.
They are adding up, and of course, it could change at the margin what these central banks want to do.
I agree. At the margin, yeah.
Yeah. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, President Biden is vowing that he will not retreat on sending out $1,400 checks as part of a stimulus package. The president told House Democrats he is willing to tighten the eligibility for the payments. Republicans have suggested making the checks smaller and sending them to fewer people. House Republicans have voted to keep Wyoming Representative Liz Cheney in her leadership role. They turned back an effort to remove her for voting to impeach Donald Trump. Meanwhile, House Democrats are preparing to oust Georgia Representative Marjorie Taylor Greene from 2 committees for her incendiary statements. House Republican leader Kevin McCarthy said he would take no action to punish her. It's the latest sign that the Federal Reserve is not close to scaling back its massive bond purchases. Fed officials played down the economic impact of recent stock market volatility. Chicago Fed President Charles Evans says he doesn't see the market swings as a link to macroeconomic borrowing costs for businesses or households. And officials say the UK has now passed the peak of the latest wave of the coronavirus pandemic. The country's chief medical officer says there's a downward slope of cases, hospitalizations and deaths. Meanwhile, 10 million people in the UK have been vaccinated. That's about 15% of the population. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Let me look at the data right now. Ritika, thanks so much. Equities, bonds, currencies, commodities. Churn in the equity market. We'll see which way that breaks. Red and green on the screen. Yields higher, 1.13% on the 10-year yield. And of course, both Francine and I are watching euro really nicely under a 120, 1.1988. I'll let her talk about euro. Sterling. Gold doesn't give me much. Gold 1813. You think reflation. You think gold higher. Not 1814 per ounce there with some curve steepening. And Francine, to all of the politics of England and of Italy as well, I'm pleased to inform you, in America, reduced fat milk is $1.39 a quart. Just so you know, I'm up to speed on the price of milk.
Thank you, Tom. Tom knows I have a real issue with politicians not being in touch with what people have to live in, day out. And I have to say, Tom, in both Italy but also the UK, ministers have almost lost jobs because they didn't know what the price of milk was. And then they always get surprised that I know the price of milk. I'm like, who's buying the milk in my house?
Exactly.
If I'm not, to feed the liquid cherubs. Stocks edging higher. Futures are pretty much steady, as you're saying, Tom. Look, I'm looking at dollar. I'm looking at, I guess the rally we saw in global stocks are pausing. Treasuries is where it's at, and so if you look at the Treasury curve steepens, to the loss level seen in February 2016. I just don't know where we go next. So a bit of focus on that, and then European stocks kind of positive at the moment because Draghi, for now, is in charge of Italy. Now, joining us to talk about the markets, to talk about the reflation trade and everything in between is Rick Lakai, State Street Global Advisors, Global Chief Investment Officer. Rick, as always, thank you so much for joining us. Where does the reflation trade end?
Well, it's got quite a long way to go, we think. And I think there are good reasons to believe that this is a multi-year development. Obviously, we've got the very short-term stimulus in the US, which is very welcome. But I think there are other factors coming into play, particularly the seriousness with which we're now attempting to decarbonize, which in itself is a pretty significant investment event. Now, some of that investment might come from public sector, but I think the private sector is also beginning to invest. And I think that they're feasible investments, and I think that's going to be part of the reflation trade over the next several years.
Where are we, Rick, importing inflation? Are we creating inflation? Is it the stimulus? Are we importing it from China or elsewhere?
Well, I think you've probably got little pockets that are emerging. The question is, do the pockets join up to something that's significant, or do they remain kind of isolated sector-level geographic pockets? I think I'm more inclined to believe the latter. I think when you've had such an enormous change in the functioning of the economy, you're bound to get these hot spots, and I think that's what they are. But just as you've got kind of deflationary cold spots, you've got the hot spots which are much more visible. I think they will die out. I don't think there's a case for broad-based inflation when you've still got such a lot of surplus capacity overall.
Rick, I want to look at your new duties at State Street. You're phasing into a real careful study of ESG, which is a celebration for all of us. Rick Lacaille, folks, is real quiet and unassuming. He also has a BS factor of 0. Rick Lacaille, how are you going to price carbon? Do you have any optimism that we can establish an adult pricing mechanism within the vogue of ESG?
I think it would be helpful. Do I have optimism that we're going to do it on a transnational basis with legal protection and legal enforcement? That's going to be much harder. That's kind of treaty level, nation or multilaterals. That's much harder. But I'm more optimistic. If you set the carbon to one side, I think it would be very valuable as a signal that when you look at the investment required to get to zero, the numbers are staggering. But when you look closer and closer and closer, they seem much more feasible, both within what existing companies can do and also in the context of a debt-to-GDP ratio in the world of 350%. They don't seem that large. So I'm becoming a bit more optimistic that we can actually do this.
Rick Lacaille, within our optimism, the reflation tone of this Thursday morning, maybe the view out past the pandemic, does ESG take investment from the whole, or does ESG add a new investment overlay?
I think it's doing what we've always done, but better. And I think that the results that you get by looking more closely at some of these things that come and bite you in the long term have begun to be recognized. And I think essentially the integration of ESG, which many managers are now doing, is helping them to learn how to do things better and particularly how to do long-term investing. Because I think it's not right to caricature, investors currently as short-term and bad. I think there are many that are long-term. But if you think about ESG, some of these factors force you to think about the long-term. Just think about the conversation we're having about decarbonizing the economy. They're very, very large-scale investments. But these businesses that we invest in now, whether it's in the energy or transport sector, they are making long-term investments anyway. These that we, I think, should be making will be better investments and they will pay off. But I think it's one of the ways in which the asset management industry is going to gain more credibility with its customers and with other stakeholders by focusing on things that matter in the long term.
Rick, who's greenwashing, or what is being greenwashed at the moment?
Well, there's always a risk with greenwashing, and I think there's an element there that's consumer protection. I think European Union is rightly focusing on how we classify things. It can look a bit rigid sometimes as soon as you try and classify the taxonomy, but it's an important thing to battle against false claims that are made. But let me just put another perspective on it. If you think about index funds that own everything, many clients want to own the whole market portfolio, but they want that market portfolio to work better for them. So even though they're investing in the so-called bad boys in the fossil fuel industry, they want their index managers to engage with those companies in order that they tilt their own behavior in a way that gets us to a better point. So your portfolio may look brown if you're an index investor, but that doesn't mean that behind the scenes you're not actually improving the profile of the companies you're investing in, and therefore will get us to a better point. So I think this whole greenwashing thing is an important discussion, but we should dig a little deeper sometimes.
Rick, going back to the markets, the most immediate markets, is there something that makes you uneasy about the future. There's a number of angles or a number of forces playing into the markets. It's reflation. It's some of the volatility that we saw with GameStop is trying to understand this new world also on social media. What are we most getting wrong?
I don't worry too much about the developments in retail. There'll always be short squeezes. It's a normal part of what you deal with if you're managing money. That's a normal risk. I think what's abnormal is still the health risk. I think vaccines are coming on stream, but there's still a possibility that things go awry later this year, whether it's through mutations or the fact that many countries around the world haven't been able to afford or been able to implement vaccines. And I think that may come to rebound on us. So maybe the optimism is going a little bit too fast on the health crisis.
Rick, thank you so much. Rick Lakai there of State Street Global Advisors stays with us, and we'll talk a lot more maybe about some of the earnings and also back to treasuries. Now, later this morning, we also hear from the Bank of England announcing their policy decision, followed by a news conference by the Governor, Andrew Bailey. That all starts 7 a.m. in New York, 12 p.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
Bloomberg surveillance, Francine Lacroix and Tom Keene. Jobs day looking better in America. We'll do that tomorrow. Claims at 8:30 this morning. And with the better job statistics we're seeing in the guesstimates, what we're really seeing, I would call it, even in Europe, a little bit of a whiff of reflation, a better feeling, yields higher. Francine, what is the import of euro through 120?
Well, Tom, it of course has an impact, and we've heard this from the ECB, again and again. And we heard from 3 policymakers, I think, in the last 10 days, that they're watching a higher euro as a possible way of getting inflation up. So again, we're not talking about normalizing interest rates, but maybe, the fact that ECB officials were at pains of saying that a rate cut could be coming, that chatter moves away. Yeah. So something that we just need to focus on, Tom.
Strong dollar this morning. Rick Lakai with us, and we continue with State Street Global Advisors. Rick, what is the quality of the earnings season, the global earnings season? Everybody was gloom and doom. It's been pretty good, hasn't it?
It's been pretty good, and some of the patterns have continued. So US has beaten the rest of the world, typically both on revenue and earnings. That's a kind of multi-year pattern that's continued. I think if you look at individual companies, you're going to see stress. But I think the economy's changed in the way that it's responded, and the lockdowns obviously are having a very different effect now to the kind of effect they had in March, April, May of last year. So, I mean, on one level, you'd say, well, it seems more survivable. I think what I find really interesting about the earnings is what they deliver next, because, you know, the earnings look somewhat resilient, as you pointed out, but I think the lack of hiring of labor on one hand is quite worrying, but it's going to rebound very nicely in earnings. So I think we're going to see a much sharper rebound in 21 than people expect.
Then on positioning of portfolios, you're not running from equities?
Absolutely not. No, we put on a little bit more active equity overweights recently in US small cap, in Japan, in emerging markets, not in Europe notably, although I think, you know, there's a case to be made for Europe. And we put a little bit into commodities as well, again, reflecting the fact that, you know, there are a lot of reasons why this investment spending is going to turn into a multi-year boost for commodities. And I think there's been a pause in investment that's going to cause a rebound in prices to continue for a while yet. So yes, we're risk on. We're equities risk on. We have a little position in high yield. We've switched out of investment grade into high yield as well. So we're with the reflation.
Rick, where do you see the most excitement playing out? I mean, I know there's quite a lot of excitement on equity. You just made the case for equities. You see quite a lot of excitement on treasuries. What happens to the currency market?
Yeah, well, let's face it, we were wrong in currencies. We thought the dollar would continue to weaken like many others, and we've had a January rebound. We still think it's a little overvalued. So there are reasons to believe the dollar will still decline in 21. That underpins some of the positioning that we've got in emerging markets. You're saying what's exciting? I think China's still very exciting. I mean, we've all gone through kind of uncertainty because of the executive order, how to deal with that from an asset management perspective. But when you look at bottom up, some of the best companies, some of the best performances we've had are those new economy companies in China, not necessarily the very largest ones either, some of the ones that you don't necessarily hear about every day. I think that's an exciting multi-year story.
I was going to ask about China, actually, because we had a bit of a wobble in China activity. Is there a worry that China's doing fine, is growing and supporting the world, but not enough to kind of get the world moving again?
Well, all economies are still hobbled, including China. So although it's done better than many, it's been flattered by its export performance, by its manufacturing, but I think you've still got a degree of consumer caution. And you still got the brakes slightly on that will hold them back a little bit. But, it's a relative game, and I think they're doing better than many other countries. And I think they're also and they were on pause, if you like, in 2020. That change from the old economy to the new economy slowed down in 2020, but I think that will accelerate again.
Rick Lacaille, one final question. With the State Street heritage, what kind of international equity do you acquire? You've got cash now. You want to go international, but there's different international equities. Which one is the most interesting?
Well, I think at the moment, Japan is really interesting. We find great kind of bottom-up stock picking opportunities. The data are looking a little bit better in Japan and emerging markets. So if by international, you mean non-US, I think emerging markets in Japan are two areas where we found things that have surprised us. And again, if you think about some of the results we got in 2020, they were new economy stocks in emerging markets that had done well. So I think confounding this perception of emerging markets as being, extractive industries and banks, there are many other opportunities there.
Rick Lacaille, thank you so much, particularly those comments on ESG. Mr. Lacaille is with State Street Global Advisors. Futures up 4, Dow futures up 9, fractional, but in other areas we see really interesting work. 1.13 on the 10-year yield is a good morning. Don't forget claims at 8:30. One of the topics with Esther George of the Kansas City Fed. We'll talk to Esther George, no question, about our debt and our nation's deficit. Stay with us worldwide. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. Royal Dutch Shell added to the disappointment of big oil's fourth quarter. The company reported net income that fell short of expectations. Still, Shell reiterated its commitment to growing the dividend again. Its dollar payout for the first quarter will increase by about 4%. In Germany, Commerzbank will post a preliminary loss of almost $3.5 billion for 2020. That's after taking big write-downs tied to the pandemic and booking charges for a massive cost-cutting program. The loss was bigger than analysts expected, and it almost completely wipes out Commerzbank's profit over the 5 previous years. Regulators in Europe and the UK reportedly will investigate Nvidia's proposed $40 billion acquisition of chip designer ARM. According to the Financial Times, government officials are calling for more scrutiny after chip industry rivals said the deal should be blocked. It would be the semiconductor industry's biggest deal ever. And that is your Bloomberg Business Flash. Tom.
Ritika, thanks so much. On the data, green on the screen, it's fragile, but there it is, correlated with a lot of other good news, including yields higher. It's a quality yield move, 1.13%, with some legit curve steepening over the last 2 or 3 days. One surprise for me is gold really hasn't given you that reflation feel. 18.14 the ounce, dollar stronger. Euro, Francine, is a story of its own.
Yeah, I was looking at euro actually, Tom. If you look at with a bit of more bearish price action, I think to flush out some of the long or the weak longs. Yeah. If you look at euro dollar's recent downside, it could reverse in the coming weeks. I know, some of our FX strategists, including Richard Jones, was sending me some of the charts, and he's also writing on the MLive. And I think we do need to spend a bit more time looking at euro. This also has to do with what's going on in Italy with Mario Draghi trying to form a government. Overall, look, we're looking at Treasury. We're looking at the Treasury curve steepening to the level last seen in February 2016. I know that's probably the story of the day. And then, of course, we look at data from the U.S. to see how long the reflation trade is here to stay, certainly in the short term. And Bank of England, Tom, we see whether they change their forecast. Nothing much is expected in terms of interest rates. Maybe, I mean, I know they'll get like 1 million questions on negative rates. Later today, our interview with the Microsoft chief executive, Satya Nadella. Look for that, 5:30 p.m. in New York, 10:30 p.m. in London. And this is Bloomberg.
Friday is Jobs Day on Bloomberg Television. The first look at jobs in 2021 and what it means for a new U.S. relief package. The January Jobs Report, Friday at 8:30 on Bloomberg Surveillance.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We did see the positive momentum continuing. Our year-on-year growth in fixed income was 21% in fixed income, 28% in the investment bank last year in the fourth quarter. And we've seen that momentum carry through to the first few weeks of 2021, which is encouraging for us in terms of the outlook. We fully intend to begin paying dividends in respect of this year, 2021, obviously subject to profitability, to regulatory approvals and what have you, but it has been part of our planning throughout to resume dividend payments in respect of this year as the first step towards a much larger, $5 billion return over the next several years.
Well, that was the Deutsche Bank's CFO, James von Moltke, discussing the bank's first annual profit in 6 years as fixed income trading revenue rises 17%. Well, joining us now out of Berlin is co-anchor of the European Market Open. He's Matt Miller. Matt, very cool to have you on the program. So much focus, of course, on Deutsche Bank. I know Tom has, 3 standard deviation for the share price, and we'll ask you whether it goes bust or whether it mates with someone else in Europe. But how's trading momentum going?
Well, trading momentum is kind of the whole story behind what's saving this bank from going bust. And it's ironic almost because the CEO, Christian's savings plan was really to lean on the corporate lending business, which obviously because of the pandemic, but also because of the interest rate regime in Europe has not been a good bet at all. But most importantly, I think for today, it just can't be underestimated how important it is, or understated how important it is, that this bank finally made an annual profit. You have to understand, in Germany, it's almost a national sport for the people to hate Deutsche Bank. It has not made money since 2014. So finally, they achieve, at such an important time because of the Wirecard scandal, a profit for the full year. Finally, for the first time in 5 years, they're able to hold their heads up to some extent.
Matt, do shareholders believe them? If you look at the share price, they seem to be questioning, the momentum and whether, this is really a turnaround story at this point.
Yeah, well, it has actually increased the share price, not by much, but by a few cents over the past 12 months. And that actually makes Deutsche Bank one of the better performers in the region. But I don't think anyone's going to be putting any crazy bets on the future of Deutsche Bank. As you heard from James von Moltke, the chief financial officer there, speaking with our German bureau chief, Daniel Schaefer, they're hoping to be able to pay out to shareholders this year, subject to regulators' approval. So that could be one reason to buy Deutsche Bank shares. The other reason is maybe this investment bank, which they had kind of been cutting down, is going to keep growing more than Wall Street. Trading revenue was up 17%. The average of the top 5 Wall Street banks was only 10%. So they're doing something right over there.
Matt, I interpolated the extrapolate of the size of the trading desks of Deutsche Bank versus the average of the U.S. banks. And basically, they're 68% of the size of the average American bank. From where you sit, folks, seriously here, Matt Miller's doing more than drinking beer over in Berlin. He's really got a handle on the German zeitgeist. Matt Miller, is Deutsche Bank big enough to go it in the next 10 years, or by definition do they have to merge?
Well, typically, you would say no, they're not. Their trading book was, I think, $1.66 billion last year, and the average Wall Street trading book of the big banks is more like $2.5 billion. On the other hand, Christian Saving is a CEO who has said many, many times, if he takes part in any M&A, he wants to be the buyer, not the target. So
is Commerzbank the target?
Have what you
Is Commerzbank the target? Come on, it's a no-brainer.
Commerzbank is not the target. That has been tried and kind of laughed out of court. That's not going to happen again.
Okay, but when the facts change, they change. Matt Miller, from where you sit in with your reporting, have the facts changed enough where those two dinosaurs mate?
No, I don't think so, because Commerzbank last year lost 2.9 billion euros, while Deutsche Bank actually eked out a profit of 113 million. They don't want to get in bed with a bank that's going to drag them down like that. Commerzbank is so exposed to the traditional lending business and has no investment banking business. So unless the rates regime changes, that could be a fact change that would change the story. And when these loan loss provisions really start to come down, if we don't see a lot of bankruptcies this year, which we likely are going to see, then I think Deutsche Bank and Commerzbank aren't getting together.
What, Matt, when you look at, how's Germany doing? I mean, these are banks that, of course it's trading, it's momentum there, but also rely on day-to-day kind of, transaction and businesses of German companies. What's the overall mood like in Germany? Let's remember it's also election year.
Germany is doing quite well, but the big story here is kind of in the weeds. My producer, Agatha Cantrill, is working on a story around the debt brake. Now, that's really inside baseball if you're not in Germany, but the idea is typically Germans are very conservative. They don't want to spend too much, and they certainly don't want to spend too much if they have to borrow to fund that spending. They have rules against it, in fact, and they've lifted those rules during the pandemic. Now, the center-right CDU wants to put the debt brake back in place and get conservative again. On the other hand, the center-left SPD and the Greens, they want to spend more money on stuff and they're willing to borrow to do it. That's why this election in September is so important. Remember, Germany is still the biggest economy in Europe, and it's the engine of growth for Europe and internally. And if that engine breaks down, it could be bad for the entire region.
Matt Miller there with some great insights, not only on the banking story, but of course on what's happening in Germany as a whole from Berlin. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Thanks, Francine. President Biden is drawing a line in the sand on his coronavirus stimulus proposal. He's told House Democrats he will not back off his plan to send $14,000 checks to millions of Americans. The president says he is open to tightening the eligibility for the payments. Republicans have suggested that the checks be smaller and that fewer people get them. This will be Janet Yellen's first public effort to address the turmoil involving GameStop shares and broker-dealer Robinhood. The Treasury Secretary meets today with financial regulators. One of those regulators, the SEC, has already said it's seeking to identify potential misconduct. It also will look at brokerages' decisions to halt buying. McKinsey & Company has agreed to settle claims stemming from the opioid epidemic. Bloomberg's learned that the consulting firm will pay more than $550 million to end lawsuits by roughly 4 dozen states. The suits claim that McKinsey helped fuel the opioid crisis by providing marketing advice to drug makers. And more than 30% of U.S. property owners are considered equity rich. That means their property is worth twice as much as the underlying mortgage. According to Atom Data Solutions, the count of equity-rich properties rose to 17.8 million of the 59 million mortgaged homes. On the other hand, underwater homes, those worth less than the mortgage, are now over 10% in the 6 states in the South and Midwest. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thanks so much. Now, coming up next, we speak to Volfango Piccoli. He's Tenio Director of Intelligence. We talk politics, Italian politics, the trade that involves Mario Draghi and whether he can really have a parliamentary majority in Italy. This is Bloomberg.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
These days, we want sophisticated but simple, cutting edge, made user-friendly. In other words, we want a hybrid. And so do retailers, which is why they're going hybrid with IBM. A hybrid cloud approach with Watson AI helps manage supply chains while predicting demands with ease. From retail to healthcare, businesses are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
If you see an ad, when you use Ecosia and click on it, we make money. But now there's a big difference compared to other search engines. We use the money to plant trees all over the world where they are needed most.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Now, Mario Draghi, former ECB president, accepted a mandate, Tom, to form a government in Italy. He will now sound out parties for support. But the Five-Star Movement, the biggest force in parliament, has refused to support him. Now, earlier on, we spoke to Matteo Renzi, of course, the person behind the move who made the Italian government collapse. He was absolutely certain that Mario Draghi would have actually a working government by next week. We also spoke to Mario Monti, the last technocratic prime minister Italy has had. Now, joining us is Volfango Piccoli. He's Tenure Intelligence Director of Research. Volfango, as always, thank you so much for joining us. Look, Euro liked the fact that Draghi accepted the mission. We saw, a move in Italian bond yields. The markets were euphoric because they know what Draghi stands for. But actually, how much will Italian politics get in the way? How difficult is it for him to find a working parliamentary majority?
It's going to be not an easy job, despite Draghi's standing, the support of the president, the support from Brussels, and so on. We are back to the nitty-gritty of the parliamentary arithmetic. This is a difficult parliament. Let's remember, this is the most anti-European parliament Italy ever had. And we are asking this parliament now to create a majority to support the man who embodies Europe to the greatest extent possible. So that is a contradiction we have. Draghi has not met yet the political parties. He's supposed to start his round of consultation this afternoon. What we have seen so far is that the initial no is slowly shifting, even in the case of the Five-Star, but we are not there yet. The question for me is which kind of conditions the political parties will try to attach to the potential support that they might provide.
Okay, so which means what? Not the reforms that we need to get through? I mean, there's this narrative, Volfango. Okay, let's, cut away the BS. There's this narrative that it's going to be easy for Mario Draghi because he has money to spend. In order to spend this money wisely, the EU Recovery Fund, he needs to do structural reforms that will be hard.
It's not easy. Yes, it's very different from Monti. Monti was a guy to do austerity. Draghi is a guy to spend. But there are some difficult decisions. The freeze on layoff at the end of March is expiring. Is he going to renew it or not? The pension reform of Matteo Salvini, the so-called Quote 100, is expiring at the end of the year. Is he going to renew it or not? So, yes, there is this money coming from Brussels. Let's also remember, let's be very, very clear. As far as 2021 is involved, there are 21 billion coming from Brussels. It's nothing. So it's important to put together a credible plan, a job that Draghi can do better than anybody else. But in terms of money coming from Brussels this year, it's 21 billion. So there is that. As for the conditions, they can try to limit the shelf life of the government. They will have a say on the composition of the cabinet and on the program itself.
Volfango, wonderful to have you on, and thank you so much for these comments. Look, I'm the outsider here. My knowledge of Italian politics is to watch every Monica Bellucci movie, and that's about the extent of my knowledge. Volfango, if I look at Italy, how does Mr. Draghi relate to the different people and cultures of, say, Naples or Genoa or Milan or somewhere down south, I don't know. What is his attachment to the people of Italy away from the political elites who are playing this parlor game?
I don't think it would be difficult for Draghi. Certainly easier for Draghi than it was for Monti. Let's remember, Draghi was for a long time Director General of the Italian Treasury at a time when Italian politics was extremely messy. He was then governor of the Central Bank of Italy. If you are not able to play politics, you won't be able to survive in this kind of job. So yes, he's been away for a long time. And is obviously perceived as part of the European elite by part of the voters, especially Five Star and Lega, but I don't think it will be particularly difficult on that front. Also because at the end of the day, there are no other really credible names around. That is the advantage that Draghi has.
Is the nation ready for some form of deregulation or re-regulation with an attempt to boost productivity?
No. The narrative that has been created by all the political parties is that money will rain from Brussels and we're going to use this money the way in which we want, which is obviously not going to be the case. There is no discussion about productivity. There is no discussion about reform of the judiciary, which is a huge issue for business. There is no discussion about labor market, what to do. We have seen a huge impact in terms of unemployment on women and the youth. There is no discussion whatsoever about that. The discussion coming from the political parties so far has been about who gets what, basically. So hopefully Draghi here will be able to set the priorities right.
Yeah, I'm still surprised that actually Monica Bellucci doesn't have a seat in Parliament, given what we've seen in the past couple of years. Lufango, is the ultimate gameplay actually that both the right and the left are trying to push Draghi in this position so he does the difficult things, seeing unemployment going up because of the reforms, because there's not that job security that Italians have been used to for the last 30 years. So you have 1 million people losing their jobs, and then they say it's Draghi's fault, and they win politically.
That could be the game, especially that the Lega could try to play. But let's be very clear. Draghi is there now as the prime minister designate because of the failure of the Italian political system. So Italy is forced to go back to another technocrat because over the last 30 months or plus, the two different coalition governments that we had badly failed to run this country. But what we have seen also is that having a technocratic government has generated political backlashes later. Let's remember, with the technocratic government of Trump in the 90s, then we had Berlusconi coming. After Monti in 2011, we had the rise of the Five Star movement and the Lega. So there is a price to pay for technocratic government, even when they do what they are supposed to do.
All right. Thank you so much, Lufango Piccoli, there of Teneo Intelligence. I love it when Lufango gets all fired up. He'll be staying with us, and we'll talk a lot more also about Brexit and other foreign affairs policy. Now, coming up in the next hour, Adam Posen, Peterson Institute president. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Mario Draghi, and that is absolutely the symbol, because he is an Italian who saved the euro, and is an Italian who will save our country.
Mr. Draghi is being called in as a technocrat to direct a fiscal expansion. This is kind of the opposite of what we've seen in previous technocrats.
I think it's for personalities like us outside of politics to build credibility during our lives, and then, if the occasion comes, try to put it at the service of the country.
Mario Monti there with some words of advice actually for Mario Draghi, and then we also spoke to Matteo Renzi, who's a person with 2% that actually made this government fall. Now, still with us is Volfango Piccoli, Teneo Intelligence Director of Research. Volfango, we spoke at length about the challenges for Mario Draghi, which frankly is also a vaccine rollout, which is just not something that he's used to being in charge of. But does the success of Europe also depend on the success of Italy? You know, if you look at Emmanuel Macron, he's not doing great in the polls, and then we have the German elections later.
Yeah, I think there are two issues there. Certainly, having Draghi around the table in Europe, I think it will be beneficial for everybody around, especially when we know that Merkel soon will be out and Macron is facing a tough election next year in the spring. So that will be helpful. On what Italy can do for Europe, well, it could try to diminish the risk that we're going to face a debt crisis once the pandemic is over, because debt in Italy has been growing very significantly. Growth is still kind of wishful thinking. So if anything that Draghi can do to boost Italy recovery, economic recovery, I think it will go a long way to minimize the risk of some sort of debt crisis once the pandemic is under control.
Volfango, how damaging, you know, I was shocked actually at some of the words coming out from the Commission about the vaccines. I mean, we went as far as talking about Article 16 for Northern Ireland. Does that mean, you know, do people in Europe actually think, what is, you know, the union we're in?
I think that from the continental European point of view, they are still looking at the governments, what the national governments are doing in terms of rolling out the vaccines and so on. And when you look at that, there are huge differences there. You have countries like Italy that, surprisingly enough, they've been able to use 94% of the vaccine they received so far. Spain as well, and Denmark. Then you have countries like Germany and the Netherlands that you would have expected to be extremely efficient, were actually behind on that front. So the rollout story is still a country-by-country story. I don't think the citizens are pointing the fingers at Brussels about procurement yet, at least. It's more about their own national capitals. But it's clear that from Brussels' perspective, they didn't play this one well at all. I think they were obsessed with the legal bureaucratic details, and they were not used to deal with this large procurement contract. And that is why things went badly wrong.
What are the ramifications for Brussels? Like, what is a lesson learned? What is the future of von der Leyen, Dombrovskis, and the rest of them?
Well, I think for von der Leyen here, the issue will be whether they can make up in the second and third quarter. Otherwise, she's going to be in trouble. You know, it only takes 10% of European MPs to call the European President of the Commission to put this person under intense pressure there. So she has some more time here to try to make up at the end of the day. So that is, and the lesson here is that if, going back to Brexit for a second, when we were looking at Brexit, the negotiation over the last 4 or 5 years, Europe always played the legal bureaucratic card, whereas the UK played the political. And we were saying the UK was making mistakes. Well, now things have turned around, and playing the legal bureaucratic in terms of procurement didn't work very well. The UK made a huge political bet when going ahead with the contracts which were a bit more relaxed, and now they are in a better position. So there is quite an interesting turnaround there.
Well, Fango, thank you so much. Just brilliant. Well, Fango Piccoli with us with huge news flow, particularly out of Italy. And again, Francine Lacroix, 3 conversations with 3 former prime ministers about the new kid on the block. In our next hour on the equity markets with futures all up a little bit, up 7, but a change regime here to more optimism out there. The gentleman from Chicago, Jack Ablin, will get us started. A strong hour there. Please stay with us. This is Bloomberg. Let me tell you about the euro right now. That's maybe our #1 watch. Demonstrably weaker, 1.1990 on the weaker euro this morning. This is Bloomberg. Stay with us.
feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
This morning, round trip, the VIX signals all is clear from 23 to the angst of 37, all the way back to 22. Yields move higher, the dollar ever stronger. President Biden, well, he talks bipartisan, but he acts my way or the highway. Democratic leadership, they will reconciliate with a gentleman and very conservative from West Virginia. And, well, quietly, tomorrow's guesstimate for payrolls, it migrates from 50 to 70 to 100,000. We take the measure of America post-pandemic. Good morning, everyone. Bloomberg Surveillance, thrilled you're with us this morning from New York, from London, Francine Lacroix, and Tom Keene with a better feeling out there, a greater optimism out there. Is that American optimism, Francine? Do you see that in the data or the feeling of the United Kingdom and Europe?
So we're seeing in data in Europe, Tom, certainly we're seeing, you know, the start of a little bit more of inflation, although when you speak to a lot of the market participants and ECB officials, they actually caution, you know, that inflation is going up a touch. We're also seeing a bit of concern on activity in China, Tom, so you have these two opposing forces. Yeah. It's a reflation trade with, you know, the hope of things getting better, stimulus in the U.S., but then actually a bit of wobble at the margins in China. The one thing I'm also watching out for, Tom, is the fact that traders are no longer seeing negative rates in the Bank of England. This is significant because, this was for such a long time the narrative from the Bank of England, yes, or certainly from traders looking at the BOE, and we have a rate decision today. And I have in my data check, folks, let's mention it now, not later, one indication I look at is a 20-year Swiss franc is just sort of the keel on the sailboat of the negative interest rate yachet, and the answer is it is a lesser negative yield. We're really seeing the negative yields give way to a lesser statistic. Right now in New York City with our First Word News, here's Ritika Gupta.
Morning, Tom, Francine. President Biden is vowing that he will not retreat on sending out $1,400 checks as part of a stimulus package. The president told House Democrats he is willing to tighten the eligibility for the payments. Republicans have suggested making the checks smaller and sending them to fewer people. House Republicans have voted to keep Wyoming Representative Liz Cheney in her leadership role. They turned back an effort to remove her for voting to impeach Donald Trump. Meanwhile, House Democrats are preparing to oust Georgia Representative Marjorie Taylor Greene from 2 committees for her incendiary statements. House Republican leader Kevin McCarthy said he would take no action to punish her. It's the latest sign that the Federal Reserve is not close to scaling back its massive bond purchases. Fed officials played down the economic impact of recent stock market volatility. Chicago Fed President Charles Evans says he doesn't see the market swings as a link to macroeconomic borrowing costs for businesses or households. And officials say the UK has now passed the peak of the latest wave of the coronavirus pandemic. The country's chief medical officer says there's a downward slope of cases, hospitalizations and deaths. Meanwhile, 10 million people in the UK have been vaccinated. That's about 15% of the population. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. On the data, equities, bonds, really the litmus paper of the global system right now. We see lower prices, higher yields, the 10-year yield to 4 digits, 1.13, rounded up, 1.14%, with some attendant curve steepening as well. Lots of dynamics. Lisa Abramowitz out with a difference in yield between the 5-year and the 30-year last night. I know Zero Hedge picked that up as well, and some really significant curve steepening out past the belly of the yield curve. I'd also note the yen back up, euro a weaker, but also Francine, 105.29 on yen.
Yeah, Tom, actually, if you look at the Treasury curve steepening to that level since we haven't seen from February 2016, our most read story on the Bloomberg terminal. So this 3-day rally in global stocks seems to be pausing a little bit, the dollar rising. A lot of focus, of course, on earnings. Deutsche Bank reversed an earlier gain after it reported an annual profit in 6 years. A lot of people are saying, wow, that was not expected. And then if you look at some of, what fixed income is doing in Europe, the focus is, of course, on whether Mario Draghi can deliver and even have a working parliamentary majority in Italy. Elsewhere, I'm looking at oil. after OPEC Plus decided to try and rebalance markets.
It is a surprise Thursday. Of course, claims coming up later. Michael McKee to attend to that, and jobs report tomorrow. But what is remarkable about this Thursday is I don't think I've mentioned GameStop yet this morning. Jack Ablin has an acuity of mathematics out of Vassar that means he writes really sharp research notes. And he's put the Crescent Capital mind to what we've all witnessed with GameStop, with Robinhood and the rest. We get a briefing from the mathematician this morning. Jack Ablin, let me go to the math of a no free lunch. There we were 4 years ago, Schwab, free commissions, Fidelity, free commissions. Robinhood started it all, free commissions. How's that free lunch going?
It's probably going as expected. What we found was that, the free commissions combined with the fact that a lot of professional sports were sidelined, Las Vegas mothballed, and a lot of people at home with stimulus checks found that, the odds are better betting on Wall Street than they are betting with Sportsbook.
Jack, what have the lessons been learned here? Now, if we assume that Robinhood is a naive Silicon startup, is in some way co-opted as they go public, how do you perceive the free commission game to be a year from now, or for that matter, 10 years from now?
Yeah, I think as long as, retail traders make money, this will continue. I see this as an ongoing phenomena that the rest of us who are in the markets as investors have to reconcile. Certainly the regulators are, flapping their arms over this, but I don't really see much, in at least the fact pattern. I think looking forward, we have to see if they take some of their ire out on the hedge fund fat cats.
Right, Jack, how does this change when the markets turn? I want to be in the markets if I make a 50% return in 24 hours. But is there a danger that actually this, not a danger, but is it possible that this suddenly kind of comes to a screeching halt?
Well, it does, but we have to keep in mind most of this Robinhood trading was born in the ashes, if you will, of that pandemic sell-off. A lot of the massive selling that was going on in March was risk parity trading. So clearly, hedge funds, quantitative hedge funds, trying to keep their risk in check while the VIX spiked up to 80. And then that turn, I think, many have credited these, pretty much complete risk averse traders as stepping in at the end of March.
What does it mean for fees elsewhere by, in money managers? Do these automatically go down if retail investors increase in numbers significantly?
It's a great question. I think that this is a group of investors, or I'll say traders, who were not participating in the equity markets before. They were maybe betting on sports games. We'll have to see if they'll bet on the Super Bowl. Maybe there will be fewer bets on the Super Bowl this year because of the 10% VIG compared to the stock market. It's an expensive proposition. So no, I think this is a new population of traders, investors in the markets. Whether they'll actually be looking for active management or someone else to manage their portfolio, at this stage, probably not.
Jack, in the new optimism here, as you see the markets now, does the yield indicate up to the top of a range, or can you call a yield breakout?
I can call a yield breakout. We have a really trusted model that we use for the 10-year Treasury. It's just simply copper divided by gold. This thing has called every turn and twist over the last several years. Right now, that model's saying that the 10-year Treasury yield should be 2%, maybe even 2.05, not 1.07.
Copper divided by gold means a larger commodity boom. Are you calling that? Jeff Curry at Goldman Sachs would agree with you.
I think, I'm calling YOLO spending second half of 2020 as we all finally break out from our stay-at-home orders and want to get out and do the things we couldn't do for the last year or so. That combined with about nearly $5 trillion of cash on the sidelines, I think equates to, we could see inflation prints double what the Fed has targeted at 2%. So we'll have to see. I think it's going to be a test of the Fed and other central banks later this year.
Jack, thank you so much. Jack Ablin there of Crescent Capital joining us today to talk about a number of things. Now, later today, an exclusive conversation with Esther George, Kansas City Fed President. That's at 6:30 p.m. in New York, 11:30 p.m. in London. And this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix and Tom Keene, thank you for being with us. A risk on feel to the day. Labor data coming up. Jess Fitzpatrick right now, our government reporter in Washington. And Jack, any number of themes to speak up here. Is there a tone in Washington of a better labor market, or are the politicians just oblivious to what's going on with the jobs report?
You know, they don't always respond in their legislative negotiations to the news that they get on what the economy is looking like in the near future. There is also a CBO, a Congressional Budget Office report showing a much rosier picture, at least for the near term, in the economy, that it didn't change Democrats' focus on things that you might think would fall off the table, like stimulus checks that aren't particularly targeted to, you know, the unemployed or something like that. So no, this kind of news has not really been changing those discussions about this next big bill.
My colleague John Farrow, being foreign, asked an intelligent question yesterday, Jack, which probably every American needs to ask as well. Is $75,000 in New York City the same as $75,000 in Tulsa, Oklahoma?
No, that's a big reason, especially why you're seeing Republicans lead the call to